Okay, happy Sunday here. Okay, looks like everything's a go. All right, I want to run over spot commodities with you real quick here. What I'm noticing, I posted earlier at Stock Twits. Um, what I'm looking for and what I'm seeing is we're getting basically what I think is an oversold, an intermediate type oversold, either consolidation or correction in commodities here. I'm seeing it across the board. Some of them have already taken off. Um, we'll say like orange juice and sugar, and but the ones that are poking, within you know uh, within 10 or 20% off the low, if even that, they're the ones who are kind of in a washout phase. And I think what we're going to see here. I posted a chart earlier, I think last week or the week prior, in regards to what happened with precious metals in 1982 and 1985, and this was off the high. Um, because I was a little more prolific yesterday than I usually am. Uh, I'm still having difficulty trying to hook everything together here on a macro level, and that what I'm seeing though is that a lot of commercial real estate buildings in town here for sale. And that may be because as rates go higher, your rate, uh, your bank payment or what have you for the buildings, you're going to have to drop. So the underline is going to have to drop to be able to make the payments. That, and then also I thought that the people that moved here to Havasu in the early 80s, we went from 14,000 to 50,000, and a lot of those are the baby boomers. They bought up the buildings, so they're working on their end game here too. So we may have a deal here where we have a macro issue with real estate versus the speculation side. Even though the country is supposed to add another 50% to its population over 35 years, we may be in a short-term uh, forced sales and pressures. If your father bought a building for $500,000 and it's now worth $1 million and he dies and the kids are kids and they fight over it, they'll take 495. They don't care. To them, it's just a pile of money, and that also runs along my lines of double-digit rates over the next after the 2024 real estate cycle because of all this money is going to be transferred, all this wealth, and the children are going to forego going to the traditional bank to get a loan because they'll end up with a wad of cash. So we'll have a lot more uh, cash sales for real estate. Okay, going back, I thought I posted it. It was the one that had sugar and um, oil, but I can just run through them real quick here on the charts themselves. Yeah. Okay, getting back on track as usual. All right, so what I'll do is I'll go and show you what I'm looking at here. Okay, start with sugar because sugar's working in an up phase now. I haven't been to Florida or sugar beets up north or don't have a clue about South America. All I know is that the price of sugar is bouncing. Okay, this red line it's the on-balance volume. Okay, and this one I usually use as the little guy. I'm a money flow man myself. But on these charts, the on-balance volume, and this is on a daily, uh, is usually pretty good about this here. Okay, so the on-balance volume coming off a high, all right, bodies are in here, and then they finally get washed out, and there's a 2-month period here where sugar, uh, the unbalanced volume is kind of matched. You're getting an equal amount of buyers and sellers going on here. The price breaks out and continues higher. Now they're about halfway to where they were at the peak over here prior. Okay. So I looked at this and I said, okay, it's as you can see, it rarely happens. Here's a whole year and it's not here. Okay, but this is just on a daily. You have both macro, medium, and intermediate term, the weekly, and then the longer term, the monthly, okay, on this here. So what I think is what's going on here is we're going to get an intermediate bounce in a lot of commodities, okay, with this here, similar to like 1982 or 1985. Silver came off of the 80 high, dropped down, bounced in 82, then bounced in 85. In 85, I believe it traded 2 years higher. Okay. Most of us are sitting here watching interest rates move up in the marketplace. We're watching the dollar about to bust 100, but it may be that they're all looking on the wrong side of the boat. I mean, commodities have been going down for 4 years, and now they finally are getting. They're a little more, confident in themselves about $600 gold. So running back to the beginning here, what you'll do is you begin to see a pattern. Okay. All right. So here we have your Brent crude. Okay. Red line again. We get our first washout here. Okay. We get a washout. We get a move. We get a $10 move in oil in days. Okay. And then we get our little bounce here, and now we got a double bottom going on here, and then we're getting to see a little bit of interest. Okay, what I'm looking for and what I started moving into is April contracts. I started moving out, similar to like natural gas and that. I don't want the front end. If the front end, if they're going to blow up, they're going to blow up on the front end. Like with the natural gas, when you get days like Friday, you want to go as far as possible because you need the volume. You need to find somebody who's coughing up. And in this case, I think I posted September of 17 futures, and I think it was 270. Okay, so I mean, right now in my eyes, I have both this winter of 16 and going into the fall of 17. Okay, and I put it up as a reference, but on days like that where you get, a double-digit drop, we're 90% off the high. You have to, well, okay. In my case, I'm trying to accumulate. Think of it as accumulating $3 and $4 and $5 silver. Okay. I'm not playing the last dollar or two in natural gas or what have you on the downside, like with oil here. At best on the downside, if we get a washout here on the front end, it'd be 38, but they're not going to wash out the back end. If someone is assumed a position, usually it's on the front end. Very few people look forward, and that's why they call them futures. I mean, if somebody's going to offer me something 90% off the high, and I can go out as far as possible, i.e. natural gas here. I get an opportunity to buy in this. I don't have to play day to day because I know once something turns, it's going to go on. Take the case of oil, went straight up for a decade. Okay, so once you're in, you're in. It's kind of like the $3 silver. Yeah, you had to buy silver all through the 90s, but once it turned, you had a decade where it went straight up. And you don't, and you guys can yell at me all you want about going against natural gas or whatever, but I'm looking at it as this $3 silver thing. It's been almost 20 years since it was at $3 approximately. So you can yell at me, but I own a 20-year low. All right. So that's what I'm doing for natural gas. That's fine. You can do it a couple different ways. You can either short it. In my case, I'm writing naked puts because I want to own the thing, but I want somebody to pay me if I go into this, because when you're getting the last leg of a bear market washout, it can be gap down, which is fine because then it tells you you're near the end. All right. So getting back to the Brent crude, you have this here, you have your first one, you get a bounce, and you have a second one. So at best here, we have a double bottom in the oil. If it slides, I don't think it'll go below 38 here. And then on the upper end, because of the low numbers now, I mean, if you say, I think oil is going to go up 20%, that only gets you to here, okay? But you start talking with 10 to 1 leverage, 20 to 1, 50 to 1, 100 to 1, that kind of thing, 8 to 1, whatever. If it moves up 10%, and you have 10 to 1 leverage, that's 100% return. And that doesn't include you adding on every new breakout. You push it yourself, you know. But what I'm doing is I'm showing you here that you try not to be too bearish. Yeah, you might get this, but you might get what, $6 lower and then lose out to uh, $10 higher kind of thing. All right, so just you want to be careful on this one here. So that's this one here, and then Canadian dollar. This one's beginning to bottom out here too. Okay, so here's the Canadian dollar, and the on-balance volume's doing the same thing, and we're getting a multiple-month washout. And we remember that I was following the cycles on this here too, and they were dragging out by about a month. Like this one was, the Canadian dollar was, I believe, August, and I had to wait till September for the bottom before we got the bounce. Okay, and then the Australian dollar is the same thing. I think it was October. It's not on here, but we ended up getting the bounce. Okay. Let's see here. So that's Canadian dollar, and America gets most of its oil in increasing amounts from Canada. Okay. So if the price of oil goes up, the Canadian, that's just how it kind of goes hand in hand here. All right. Cocoa's now working on the other way. Okay. Some of these bigger picture ones, like in this case here, the best cocoa has right now is just a retest of the breakout. It has to hold. It's not frothy, okay, and I believe cocoa, I think, has maybe 1,500 or 2,000 above it from an all-time high. We'll look at those a little bit later. But the deal is just draw your trend line in. This looks just like a way for, you saw what, if you think of this as like the stock market from 2000, 2003, 2007, 2008, and you can see what we're doing now. Okay, so this could be a big wave forward, and we're working on wave 5 on cocoa. Check your diets. I don't know if you guys are buying those 6 packs of candy bars, which, interestingly enough, you get twice as much for what it costs for one of those dollar bars. You got me? Whatever. I'm a value guy too. I grabbed the package. It said like almost 4 ounces, and the candy bar was almost 2 ounces. And I'm thinking, you're kidding me, right? Whatever. The little guys are nice. Put them in the freezer, then you don't go through them as quickly. Or for some of you, just leave them on your kitchen table and they'll freeze. All right. So this is cocoa. All right. For me, I'd be looking for a top in this one, since the last time I played cocoa, I think it was in '97 at 800 or something. Yeah, so, okay, coffee. Coffee's getting a swing off the bottom. Now, coffee's one of those that you're going to want to put in more than, you want to put in 3, 4, 5 times the margin. Coffee, like cotton, will make you nauseous, okay? But I look at it the same way here. It's at $1.15. How is coffee going to go to free? Coffee, I think, is the #1 traded commodity, and the #1 used commodity is water, and then concrete, and then consumed commodities. I think it's rice, wheat, corn, and then bananas. I think it's how 3/4 of the planet eats rice every day. So if you want to be a king of things, you want to get into the rice business. But the other one though too is, if you become the rice king, they're going to come after you, like 3/4 of the planet. All right. So on this one here, it's all over the board. We had a washout here and here. Okay. And then just an eyeball here real quick. I'm sure this was an RSI divergence. And you're getting your little saucer thing going on here. So you're getting something with coffee. Now, if sugar's spiking because there's a South American drought or whatever, anything, you could be having the same thing, because I'll go back and look, but I'm sure there's some correlation between sugar, certain times of the year, between sugar and coffee, because it's South American, kind of like orange juice. Oranges come from Brazil, oranges come from Florida, different sides of the equator. All right, so we're getting a move in coffee here. Usually when you get these wide swings like this, see how it was pretty much, they walked it down, it wasn't a problem. Then it blasts through this resistance, okay? So they ran into more buyers, okay? They were willing to find buyers, and I'm sure they were buying for deferred contracts. Came back down and they bought again. They didn't get a new high, but I'm going to assume next time that this thing clears, this is going to hold for a while. And you're going to get coffee is one of those that gets pretty whippy. So, and I've followed coffee for 30 years, and if it's going against you, you need to get out. Is all I can say. I mean, you can put on spreads, and it can even get iffy on you. Buy the front month and sell the back. It's one of these like what buy December and sell July. Remember South America. I think only Hawaii. We grow coffee only in Hawaii. All right, copper. Okay, copper. Same thing. We're beginning to get a washout here. There are times, and this is a daily, so you can move it to a weekly or monthly to see if you're reaching any of these pivot points or whatever. I think the low end is about $1.60. Copper does go below it, but what I think is happening is you have an underlying inflation. Like some of the prices that we've seen in grains in the 60s, we've never returned to, I believe. So there's always that underlying inflation. I mean, you're not going to sell a bushel of corn for 75 cents, that kind of thing. Kind of like minimum wage. We're putting a floor in everything. Okay. But this looks pretty good as on working on a washout. Now, at best, it can go sideways at best, okay? Because we still have, copper does get used, blah, 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 but if we're producing it, it comes into play with the dollar. This is going to have to be domestic consumption, okay? A lot of this is going to have to be domestic consumption. I believe I forwarded something out yesterday on my Twitter to the 2015 copper. What was it here? Okay, where is it? 2015. Twitter? Yeah, there's a button. Hit it. There you go, Kev. My homes. This is me. National Perspective Economics, the Shia and Sunni. All right, here's the copper. I put down Phelps Dodge. FCX bought that. Okay, annual data of supply and demand and consumption. Okay, whatever. Help yourself if this gets you all warm and fuzzy on the inside. I'm just having difficulty following this thing here. Okay, all right. So this is scrap. Okay, mine production and scrap. Okay, blah blah blah, blah blah blah. There you have it. Okay, so. Cute. All right. But then you get down to this thing. I guess I was looking for things like homes. This was the bottom of the last real estate cycle prior to the peak in 2005. This is when real estate peaked out, was in 2005. Okay. And Arizona. Cute. Maybe that's why I have headaches. They claim the air is the best in the country. We won an award. Right? Okay, and world production, yada yada yada. So if you're interested in that, I put that on my Twitter. And then if you're interested on it, the commitment of traders here, and then the Amazon one here. Now I'm really sidetracked, but while I'm at it, I'm here. Okay, while I'm here, I might as well go over it. Okay. Okay. I've put up charts of oil and the Canadian dollar since I'd mentioned it earlier. Divided oil by the Canadian dollar, and it's actually lower than the 2009 low. Here, what I did is I took the spot price of natural gas over March and April. Those are the end of the seasons, okay? So when you have a basis, okay, you have your backwardation, and then you have your contango, okay? But if the front contract is moving higher than the back contracts, okay, you have front end demand. People are willing to pay up now for it, okay? Business is good, or they didn't plan, or whatever, okay? So there's a positive bend on here, okay, then you have the front month being priced over the back months. It's in demand now. People want it now. They don't want it later. So this is a natural. So you're in natural gas. You're beginning to get some of that going on, where the back months aren't falling. Okay, the front month, the back months aren't falling as hard. So the only pain is on the front end. Basis, okay, and then here was ways of trading natural gas on here. And then Amazon. Here, okay, I threw this one out. Amazon is kind of going vertical here. We ran in a pretty deep pullback here, and a double action going on. Now, what I thought about Amazon is if folks decide not to go shopping in droves into the mall. Okay, earlier it was the long Walmart short Amazon trade, because I thought that people would actually want to leave their home and go out and experience the mall and go shopping. Okay, if that was going on. But recently we've seen the retailers and the indexes all kind of fall apart. So I'm not quite sure what that story is. There was the REI thing with the Black Friday that people, I'm sure if we were going to go to orange or red or yellow, if we still played that game like we did under Bush, I'm sure we'd kick it up a notch or two. Um, we play our games and they play theirs. But what I was thinking is if everyone decides to go to Amazon and buy, okay, Amazon, all right. What happens there is you have an incident where everyone goes to Amazon, say for the first time or whatever, and they all buy. What that's doing is pulling sales forward. All of a sudden, you have people that try Amazon. They might like it, they might not like it, then they stop. So Amazon ends up with a warehouse is full of stuff that nobody wants. Okay, and you can end up with that problem too. You can lower your price and everything, but the deal is that all of a sudden, everybody decides. It's kind of like when your football team wins the Super Bowl or the World Series, and everybody runs around and buys the jerseys and shirts. That's the end of that story. So it's not that I hate Amazon because they don't have an earnings or they have pennies or whatever or what. Well, all I'm saying is that Sears was kicked around by Walmart. Amazon is being kicked around, or Walmart's being kicked around by Amazon. The retail, they don't last. None of them last. They're all Carson, Peary, Scott, Donaldson's. The Montgomery Wards, on and on and on and on. They become behemoth. They have stores everywhere. They try and, to grasp everything for everyone. One day we're selling socks and underwear, and now we have a gas station and changing tires, and then we're selling food. But all I know is if I was a lawyer, I'd be all over Walmart all day long. Their bait and switch is beyond pathetic. I mean, I can literally walk in randomly at random times and buy random things and ask one person to gun them into the system and get a price and run it through the checkout, and it will be a different price. They make up fake labels, fake tags, fake everything. And I asked my mother how many women actually read their receipt, and she said probably 1%. And so we can blame women then for, for perpetuating the fraud. Whatever. That's here nor there. But moving on. Commitment to traders. It's updated. Links here. And then some economical stuff here if you decide that you really need to do something on Wednesday, Thursday, and Friday. Okay. So getting back to here, our little red line. That's right. Just mail me the hate mail there, ladies. Okay, so we're getting a washout in copper too. Okay, what I'm saying is that if it does bounce, if any of these things bounce, I wouldn't be a big fan of adding fresh shorts to it, even though in this case you'd want to short here, but by the end of this game here, okay, of adding to new shorts on the breakouts, add to short, add to short, add to short, add. This one didn't do it. This one broke. Add here, and you're coming down. You're gonna wait for the bounce, and then come through and short it again. You want to be very careful on this one here because you're running out of basically bullish participants. It's only the bears. So somebody has to be on the other side of that, and I'm sure we're going to start seeing that slide come into the commitment of traders reports. Okay, corn, same thing. Now, corn and copper are two different, but we're getting the same type of look. I can handle this as a harvest price this year. Uh, for corn is what, maybe 420 to 240 or so. You know, it'll take a little while before we get the next drought. So in this time we may be having, it finds real demand. There's real, hand to mouth kind of thing. Bacon prices are coming down. Feed the corn to the pigs. That kind of deal. Beef prices are coming down. What happens is the speculation comes out of it. This little move here, this wasn't anything to do with a whole bunch of new chickens or pigs or cows. This is just speculation, but you get to a point where there's a natural harmonic in the marketplace. And for right now, some of the commodities, a majority of them, I think, are finding it. All right, here's cotton. Uh, the low on cotton, I think, is like a quarter. All of these are low. They're all basically oversold. I'm looking for some sort of intermediate, maybe a move of, say, the spring, summer, then go from there. Like in like an ABC type correction into next year. Okay, like here, like say cotton goes, up in here, but this is, I should move further out. But a lot of these are bent sideways for a while too. Okay, here is gasoline. Okay, we're consuming more gasoline because the price is cheaper. You put it into your $20, you get more when it's 230 or 190 or whatever. Okay, you're getting your little bear flag here, but you're also getting, this was the low, and what you have going on in here is you have people consume or buying into it on the weakness and stuff. You have people who are interested here. Okay, and then if this is a bear flag, this is all you're going to have. Okay, and then you're going to make some sort of intermediate low, kind of like this here. I guess I could take a look at this one here. You get yourself a low. Here's in January, then peak out again for 6 months later. So you may have something here where it comes down and goes back up for 6 months. Okay, so that's, just don't get too excited here. Gold is the same way. Gold is up here, up here, up here, la 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 la. Now it gets down to oversold here. Okay. Okay. On the upside here, okay. Now it can go down here. Now the thing is when you get a washout, like I said, this one went on for a couple of months, okay. But the deal is all when you measure a pattern like this here, so it's 1070, so it's about $1.20. So $120 lower from here would be what is that? 850, 950, 950, right? Yeah. Okay. There you go. Okay. Good boy, Kev. Yeah. Okay. Yeah, 120 off. Okay. 950. Well, that's not right. So, okay, if it comes down here, this measuring pattern is about 100 lower from here. Okay, so 950 in the low end. So what you could do is crack 1,000 and then come back through. But what I'm seeing though is that a lot of these commodities are all like, here's heating. It's the same thing. Heating oil came down and paused, and that's this type of time of the year for heating oil. Plus, it's also diesel, trucking, and things of that nature. Okay, if you look at this huge pattern, it does look like a lot, but you could have a thing where this is the shoulder, this is the head, comes up and makes another shoulder, and this is your trading pattern for the next decade. Okay, so here you have an oversold condition. Basically, you're getting a washout in heating oil. Okay. Here's light crude, the same thing. We had a washout here. We got a run of $10. When they got into it again, I'm sure this is your T-Boone guy. Got into it. We got down to here. Didn't get a washout like we did back in here. Okay, but we got a run. We poked on through. Everyone was convinced. I wasn't. And then you go up. All right, so this now it's worse. Okay, here you have, it's worse than it was at this low, but you made a higher high. So what happens is you have if you take all the players that are in here, the, what I'm reading here is that, say, the bulls, and they're gone. Okay, you're running out of the bulls who are shorting or selling, having to sell at a lower price. So in this case, we have, what do we have here for moves? So 37 and 50 is $13, and 13 above this is back to 63. Okay, so you could have an incident where it goes up to 63. Okay, all right, so you have, same thing again, shoulder, your head, and you're working on the shoulder. So the little pokey is probably like, say, 63, and on your downside here is like your 35, 36. Now, like I said before, the oil divided by the Canadian dollar, that ratio is below the 2009 low. Okay, so actually, let me show you this here too. I missed this one on the first one. Okay, let's go to the CRB index. Okay, CRB, yes, I know it's not the Goldman Sachs one, but it's just a reference. That's all it is. Okay, so here is basically your lows for the commodity cycle. We're all in this time period. All our money shifted into the .coms, and the money came out of the commodities, so there was no interest, and so this was your cycle. You get out of the .coms and you get into commodities. Go along with the dollar. We're in a different cycle now. Okay. All right, so then you have your high. This is your unwind of the huge move, and then this is your distribution, and then we'll collapse. But what I'm trying to point out here is that here's at your 185, your 181, and 182. This is basically, like, we'll say, your all-time low, and now we're poking through it. Oil's not doing it. Copper. So what I'm getting at is that prices are cheaper than they were prior to it taking off. I'm not saying we're going to get this. I am also, but we may have geopolitical issues in the world. Okay, where things are distorted. Kind of like the 1980 grain embargo to Russia. We just had to run it through Rotterdam. Kind of like our little buddy Mark Rich, who was trading Iranian oil. He was doing his little no-nos and ran off to Switzerland. And so we may have that going on where it's artificially high. Can you imagine the United States having to ration? Here you go. You get a 5-pound bag of sugar a month. What? I think we go through, is it 110 pounds of raw sugar a year? I think it was some exorbitant. I was like beyond shocked. We might as well allow everybody, bring the Yahoo into the country, because sugar is the #1 killer here. Let me tell you. And if I get killed, I'll blame American sugar. Okay, so here we are. So the deal is here is you're going to get something where, like in my case, I would be willing to get into some sort of business, because of the like opening up a steakhouse or that kind of thing would be what I'd look at, because that kind of costs are down. If your steak goes from $3 a pound to 75 cents, you still have your labor issues, but you can make that up. And I'm not saying a Bonanza or Ponderosa or a Sizzler. That's a lot of work to make pennies. But then again, pennies make dollars, right, kids? Okay, so your CRB is getting to the oversold thing too, right? This is my little let's punch this up here real quick. Quarterly. All right. So okay. So here. Okay. So this is what I was talking about before, that there may be some underlying inflation, like when you have a minimum wage. Okay. So here's this, and we were on the gold standard. We came off the gold standard. Vietnam was a disaster to have, and we had to pay for it. And we also had the oil shocks and things of that nature. And so, oh yeah, we got our inflation. Okay. And then we peaked it out in 80. Okay, it took interest rates to kind of to reset everything. Basically, all you're trying to do is condition the people and the planet. The market forces would have done it even without the 20% interest rates. Okay, but if you can if your brother at the bank, you know, hands you money at 15%, and you can make 20% buying gold all day long, right? Okay, so what I'm getting at is that here was your, 50s and 60s and stuff. Okay, and this is your commodities there. Then we went through the 80s and that. Okay, and so then the prices are there's you know here was your John Deere was 13,000. Here's your Steiger 100,000, 200,000, 300,000. Okay, so different costs, chemicals, yada yada yada, but they're still getting 250 for corn, whatever. Okay, but they're getting a little more. They go from whatever 60, 80, 100 bushels, 100, 200, and now that now it's getting astronomical. I can't wait till they put 4 ears of corn on a stalk instead of two. All right. So, and then we get our macro Wall Street global commodity. This is it. And this, for all I know, this is going to last for 100 years. Oil hit $100 a barrel, I think 1867 or 68, and it didn't hit 100 again for 150 years, whatever. 150 years later, it finally hit 100 again. Okay. That's with inflation adjusted numbers, you know. So I'm going to assume that this is going to last for a very long time. So now prices are back into where they were in the 80s and 90s. Okay, um, I'm happy with it here. I don't expect prices to come down here unless we have a depression and everything gets sold. Um, we're not in that agrarian society. The commodities are closely held. We're basically doing the same thing that we did prior to World War II. A lot of oil companies were down to. I think we have just as many fat oil companies in America as we do money center banks. We're down to like a handful. You could put them both on two hands. So what happens there? It's kind of like going golfing. They all agree to do this collusion. They do it. It doesn't work. Guess what? They all have to puke up, and that's when you just. It's like the computers and stuff. Naked short selling. These commodities are traded in cash. So I don't ever have to make delivery of bacon. I can run bacon to zero and never have to make a delivery, and then I can pull a John Corzine and go, oopsie, I screwed up. Somebody else take care of that for me, would you? Thanks. Have a good day. All right, so the commodities in this case are basically, and to me, it's oversold. The underline is beginning to show up. You get here's your crude. You're getting a washout. This is happened a year ago. So in theory, you could say this is one huge just double bottom, quadruple bottom, whatever. You could say that this is it. This low may hold for till 2020. This low here, this could be the low for the next 4 years. Okay. And all of a sudden you start trading, from say 40 to 60. But what's going to happen is volatilities. You're not going to have these huge. You're going to have a lot of this. It'll trade this way and then go up and bust a buck and then trade through there and bust a buck and then it'll spike up and then it'll come back down. All right, because I'm looking for 2020's recession, but like I mentioned before, my gears aren't. They're still spinning around and things are working out okay, but it's I don't have a good grasp on the whole macro thing. One time I was convinced I could actually manage continents. Now things are a little bit different. I think it's the psychology of it. I trade off of psychology. Um, Psychology first and math second. So it's like the commodity thing. What do I see here? Well, I see, here's prices making new lows. Okay, well, but I don't see it in here. Something's just, the markets, the participants are saying one thing and the price is saying another. So maybe I'm in this guy here. Francis, I get his little newsletter thing that he sends me, and I believe I also forward it to you guys. Let me see here. Let's see here. Okay, charts. Ooh, yeah. Let me see here. All right. The lunar cycle one, or the sunspots, is quite an interesting deal here. Because we, as humans, um, whoa, what about, not in stocks? Okay, let's see if he does. Okay, all right. So, all right. Okay, so here, it's talking about cycles. Okay. All right. So on this picture here, okay, he has cycles. Okay. It's kind of like fishing. You use a little fishing chart to know when to go get the fish. You have your moon cycle for going out and getting clams and stuff off the beach. Okay, so we use cycles, humans, to go out and go hunting and like planting. Farmers plant on moons, that kind of thing, so they can harvest on a full moon type of deal. All right, so here you have your cycles. Okay, now here you have a bottom and it goes up. Okay, and on this one you had a top. But what I'm getting at is that occasionally you'll have a counter cycle move. And I think that's what we're in right now with the commodities. The commodities are done dropping, even though we have the dollar and everything. We may have something where the prices are going higher because we ran out of sellers. And then all of a sudden, like I mentioned before, that I'm buying April contracts. Okay, all of a sudden you have all these guys who say, for example, the people shorting natural gas. They're shorting everything in the front, and all of a sudden it stops. Well, now they have to turn around and unwind, say 18 months, different months, December, January, February, March, for the next 18 months. They're short all those contracts, and all of a sudden it turns on them, and it's not and all of a sudden the market moves against them for 6 months. And it's and of course they have to induce their own. Most people don't flick a switch and get out of it. Ask questions later. They mostly, because they don't know. They don't. They don't. Someone. Okay, if you grabbed all the computers right now and took all the natural gas things and said, hey, you know, will natural gas go down tomorrow or over the next week? And the computers are going to come back and go, I'm 81% certain it will. Well, then the next day natural gas goes up, and all of a sudden the computer says, well, I'm 80%, 79, 78. So now all of a sudden it's going the other way because it's backward looking. They use the patterns. And your rise over run type of deal. You have your 45 degree, and all of a sudden prices crater at 70 degrees, and then all of a sudden move towards 90. That this is rare, and this is usually marking a bottom or a top, parabolic. Okay, so what happens sometimes is when you have these natural cycles and everything's following these natural cycles, and they get out of whack for whatever reason. I had one where some jackass used a backhoe in the Chicago River and flooded the basement of the CME, CBOT, whatever. Flooded the computers, and it threw off everybody's natural ebb and flow of stuff. When you're standing in that pit, that corn pit or that S&P, that's a breathing, living creature. And bless it that it's at least zero sum. So, if you're breathing in, you're taking the air from somebody else. We're breathing out the same thing. So it's compared to equities, where one guy in after hours closed it up a dime. Now 100 million shares just went up a dime when he only bought 10. That kind of thing. All right. So what happens is sometimes you can have counter cycles. Okay. And so I think that's where we're at. You're running out of, you have your natural cycle, and then all of a sudden things begin to change. Is there a better one on here? What do we got here? Gold. Try gold. No. Okay. Crude oil? No, so it's just the equities. Okay, so here's a crude oil here too. All right, so he has this little trend line here bouncing off of here. Okay, and you have and it's on the top here. So this might be through the 80s. So we may have a run here, just like here. We're okay. Say here it is, 1986. Okay, so we could say that this low, okay, at $37 is the same of 1986. Okay, where it hit $10 a barrel. Okay, and then it just traded. We did get a run to 40. Okay, for a Gulf War, an OO. Okay, I'm looking for a low on the OO. Then we had the low before we took off on commodities at 10. So it never did hit $10 a barrel since what is this, 30 years? Okay. So this could be the same thing here too, is that this is a low just like this low, and we go sideways for a while. Okay. Here's oil. Okay, this is logged. So, okay. So we may have something where it trades sideways to, the in this channel, up but down, kind of thing. So our whole industrial revolution going on here. Okay, so we may be in a counter cycle move here in commodities, where a lot of us think, okay, it's going to continue lower for the dollar and everything, but as they say, it could already be baked in. I didn't know how choppy this one was here in natural gas. Usually when you have a sideways action like this, that's a wave 4, and we're just waiting for the washout. It's called gambler's ruin, or the winner's fallacy. It's like if you go to an auction and you buy artwork and you realize you're the winner, but you overpaid for something. I've seen things on TV where they take a $20 bill and they auction it off, and the stipulation is the person that is second has to buy it. Okay, so all of a sudden the dollar bill gets like $41, and all of a sudden you realize that this guy only has $41 in his pocket, and the next guy goes 42, and the other guy can't because he only has 41. He stops. And he realizes he just paid $41 for a $20 bill. Same thing with gold. Somebody out there paid, $34 for silver and still sitting on it. I know people that are still sitting on silver from the 70s. I don't know what they're waiting for. But you end up with this thing where all of a sudden you begin to sell this stuff, even below cost or whatever. I remember one year Kaiser Aluminum, they were long electricity futures during the Gray Davis period, and they are Enron buddies, and they ended up shuttering their plants because they made more money selling their electricity. Okay, so it could be the same thing here where you're running in that all of a sudden we get a washout on the front end and we buy on the back end, and we can stop turning off, shuttering the rigs in that, because you already, if you have to make forward deliveries, you tell somebody down the road you'll pay, you'll charge them $270, and you'll deliver at $270, and somebody over here is selling it at $2 or $190, or in November's case, it's not on here, but $188. Which I think is low, 188. They're in, so we can shut off rigs because these guys are already net long, the producers. You're seeing it here in platinum and palladium, the same thing. You get a double bottom here, you're getting a bounce. A lot of these are thin, so you can have these guys, here's 8,000, 7,000 contracts, and I think this palladium is either 50 or 100 an ounce ounces to a contract. Platinum is 50. But you have, you might have a big double bottom here and a bounce. It could be, and if it is short covering, it's going to be short, sharp, and quick. Okay, I don't recommend these. Yes, they do have nice moves. I don't recommend them because they're thin. But you may have somebody who comes in here, like one of these little hedge funds that are out a whole shitload of money. Last year they're up 40%, and this year they're up 20%. Gotta love the people who chased after that 40%. Ooh, I'm going to go with this guy, and then lose a fifth. Okay, so And it, well, I guess it's getting a little better with VRX, but all right. But they can come in here and run it, and we won't say quote unquote corner the market, but it won't take much. All you have to do is call up your brother who runs or your cousin who runs I don't know, Engelbert Humperdinck or whatever that miner's Engelhard. There you go. Good going, Kev. Made a joke. All right, so and tell them, hey, I want to buy all of your palladium. They pull the same thing as Enron. All they do is they buy up, or they can just do it on paper. Hi, I'd like to give you $1 an ounce as a down payment to suck up all your production for the next 3 years. Okay, says his cousin. And then all of a sudden, all these Ford and all these other guys go, hey, we need some palladium. Ooh, you're shit out of luck. And that's all they do is they choke off the supply. Platinum, same thing. Okay, platinum, here we go. Washout. Okay, so this may go on for 2 months. You might get a slide to here, but what I'm saying is you need to be very, very, very careful because the market is turning out to be one-sided now. Okay. Agricultural, just draw a line through here. Here's our happy place. It looks like we're going to be in a happy place for eggs here, for whatever reason. Okay. Here's a fun one for you. Okay, how about, follow me on this one. So you're in Syria, you're living in Syria, you get 200 or 300 calories a day because of the war. You can't get it. You have the money, but you can't get it. All right, so then all of a sudden you get to Greece or whatever, and American Aid comes in, and they give you between 300 and 500 calories. Okay, so all of a sudden now you end up with more consumption. Okay, never thought about that, but I'll have to look into that. Because like during World War II, we had a lot of consumption end up at the bottom of the ocean. A lot of it blown up, wrong spots, feed the enemy, blah blah blah. It's tough, It's tough to go out plowing when they're bombing you. There's in the ravine there are the tanks, and you can't really plow. They want you to plow. That's why Hitler went in the fall, scoop up the harvest. Mine. Yeah, well, yeah. Then 43 rolls around. Whoopsie. Look, it's zinc pennies or steel. I guess those were steel, weren't they? All right, so you have a little commodity action going on here. You can see the momentum is waning. Okay, so we're finding a natural consumption balance here. Here's our energy. So we have what do we have? Crude oil. I'm going to guess it's crude oil, natural gas, and then distillates. All right. But you're getting the same thing. You could have a shoulder, a head. Now, I'm not saying it's taken off again. Okay, but the thing is that you might have, an intermediate where this has a counter cycle or something for a couple of years. Okay. Industrial metals. This is back to our aluminum, copper. We looked at it down, I believe, on the Amex index. This is say like a wait for. This is your slide. If you're gonna, if you're Ford or I guess cars are 25% of United States GDP, and we're 20% of world GDP. So, you're going to have the consumption side. We might not all buy 2 vehicles now. The millennials may be happy with 1 vehicle or what have you. Or we might start businesses where everybody just goes and leases a car for the day. It's kind of like taking a cab. We own 1 car and then just go to Hertz when we want to go out of town, that kind of thing. Avis, America, whatever. But a lot of these, like I said, you're at the end of the game here. I think in the short term on our livestock, then on the next one, precious metals, I don't expect, things to, seasonally the dollar is usually weaker because of the shopping that goes on, and we flood the market with money. They make the money ends up in the banks because of balances of payment. Everyone, you have plastic. You go buy something. People have to be paid with that plastic, so you have to turn plastic into physical dollars, And if you have a massive supply of dollars hitting the market, you know, um, you're gonna have prices come down. Here's silver. Like I mentioned before, silver doubled in '85. It went to 9 to 18. Do I think it's gonna go from 9 to 28? I don't think so. But even if you get a 20% move, 30% move, 50% move, you know, it's worthwhile, you know. And as you can see, you had some trading here, and now you got your sideways. But it's just, we're not oversold, or it's not oversold here. You can see how they ran into it, and then came screaming out of it. All right, here was a bottom that was good for a couple of bucks. Here was another bottom, and that was good for a couple of bucks. Same thing. Maybe we might get down here, and it's worth a couple of bucks. You know, you never know. You never. There's so much money out there right now. So much of this stuff can be done off the board. Like I said, you just call up your brother. You say, "Hey, I'll give you $1 an ounce, and I'll buy your production of spot silver for the next, 3 years." And all of a sudden, there's an artificial, there's artificial shortage. You know, we play our games and they play theirs. Here's soybeans. Soybeans, the same thing, just oversold. The prices are. This is typically at a peak in beans in a bull market. Usually beans are more around $5 or $6. All right, so there's only a few more dollars to the downside, but it may take a little while. We may be getting something here where you have things where money is, if all these people leave, okay, I don't know what they grow in Syria. Okay, we'll just say they grow wheat. All right. If all the farmers are leaving because it's a war zone, they end up somewhere else. They can't produce the wheat, so you don't have that supply, and then you have to buy in the open market. Your USAID, your Red Cross, or whatever. So they end up having to buy on the open market. Okay, and of course we know we're down to what, 6 sisters or whatever, 5. They just all get together and play golf and go, okay, this is what we're going to do. And then there's an artificial shortage of grains and stuff. They just ended up buying it all. Whatever these guys, whatever anybody threw at them through all of this period here, they just buy it all. They buy it all. And then if they want to take delivery or whatever, take delivery and just roll it into their storage facilities. And we do have a lot of storage facilities. I was kind of shocked when I went to Aberdeen, South Dakota, and I was driving through Yankton. They have some sort of thing that they probably haven't had since the 1800s. Trucks coming in and rail. I mean, it was like, wow, serious industrial. Okay, and here's our sugar we looked at before. 2 months of it got oversold, went sideways for 2 months. Accumulation came in, and it was a lot of volume. A lot of volume in here. The prices didn't clear. Most people would wait to get to here for it to see if it's in a bull market or to reverse. Most of the time what they do is they end up shorting here, and that was that pause. It's kind of like stairs. You hit it, come back down, you hit it again, come back down. Here it was pause break, and then they had no choice but to chase after it. And then this I think is going to be our first real shakeout. I think I did a chart on OVAX, YouTube, and it shows how I look at the market. But this is a pretty good jump out of the gate here. Basically, just 2 months of accumulation, and that was the end of that story. Wheat's has the same thing. So I mean, I ran through 30 charts. And 3 or 4, oil's oversold, Canadian dollars oversold, cocoa's running, coffee's running, copper's oversold, corn is bouncing, cotton is bouncing, gasoline is, I think, being accumulated, and that's it, right? Buy up the gasoline. I'm buying April contracts next year, buddy. I'm all done here. Move it into the tax year. Gold's oversold, but like I said, it could go on for 2 months. Okay, heating oil oversold. That one's pretty good there. Now it's just this one indicator. I'm going to see how this plays out because it's been so long. I have to go back and look at the 1990s to see how this played out. Here's your oil. I suppose I could do that real quick, couldn't I, Kev? This will be your last video for a while, right, buddy? All right. Select date. Go back to. Oh. All right. So what am I looking at here? So how about I have to go back to here, right? That'll work. All right. So this was the daily. Oversold. Went on for what's that? Is this months? 1, 2, 3 months, and it took off. That was the end of that story. One flag, 150% flag right here. $10 to 13 to 11, and then off to 146. And I only thought oil was going to get to 60 at the time. At the time when I did my little report back here, I only thought oil was going to get to 60. I just looked at, eyeballed the chart. I, of course, forgot to put in the natural inflation of it feeding on itself. Okay, so then we got up to here. Okay, so that's what I was looking at before. And we had our little 9/11. And everything cratered. All right. Because everybody stopped doing what they stopped being a little herd. We got another bottom again. We got a run up in here. Okay, what was I looking for? Can I go back to the 80s? Yeah. Okay, how did it look? It came down in 82. It doesn't look like that far. 85. All right. So that was our final washout. Okay, now two. There's one there. There's one there. 88. 88 and 89. So, okay. But that's when 88 was a commodity drought. Okay. So we had a drought, a massive drought in the United States, and they were ending up buying all commodities, and it went against them. But they were able, and then this is where Bush banana head comes in. It didn't take long. I know how to get rid of the oil that we got long on. Morons. All right. And then they kept buying it as it went down. See, this is what happens after you have wars and stuff. The little humans just keep believing it. Oh. You know, the top is in short term is when everybody stops talking about terror and shit. All right, so okay. All right. Hey, what I was looking for here was to see whether our little line is. But let me I'll do this. This is not as sensitive. The weekly and stuff. So you had it come down to here, okay, on our daily and the oil. All right, right. Okay, here was we got it oversold on a weekly 40s and it bounced. They held on to it. You know, this is your T Boone Pickens and everybody. You know, it's going to go to 70 something. Well, not today. And come on. And now we're, you know, if we come back through, okay, then this is going to wash out. The daily's already beginning to wash out. Okay. So now you have, you know, if I go back here, so you need to go back to here on, if we got a weekly washout in 14. Okay, so how far down did it go on the daily? I need to go back to here. Break, right? Okay, so what am I missing here? Oh, just breaking, Kev. 14. Okay, here was the break. Here was the hard sell. Okay, right? The current? Yeah, okay. So here was our hard sell on the weekly. Okay. Get a bounce, come back down. Here's where we are on a daily. So why does the daily not look right? There we go. We needed adjustments. Okay, so this was our hard weekly sell. Okay, and now our daily sell is lower than here, but prices aren't. Okay, so could we have a move up to the 70s? Yeah, you could, for whatever reason. Whatever reason. Things like pipeline being blown up or something on the Brent side of things. Or how about just an earthquake? We'll blame Mother Nature on this one. Just a huge earthquake right there at the Black Sea, like a good Tenno or something, and split everything wide open. Kind of like I-10 out here between Los Angeles and Phoenix. Oopsie. Wow, let's keep the number 1 and number 4 cities apart from each other. Okay. All right. So this is what we have going on here. All right. Oil is oversold, not making new lows. Depending upon your pocketbook, you could do the world famous, strangle this thing, sell 50 calls, sell 35 puts all day long until it breaks out. Because what may happen here is that this thing begins to thin out. This may be your range between 37 and 50 for a while, kind of like here where it was stuck in a range for 1, 2, 3, 4 months or so before it finally broke out. We jabbed here and we jabbed. So the thing is here is I think you might want to you know, sell 49, when it gets up there, sell it. When it comes down here, sell them. I'd probably, if oil comes back down to here, I'd probably be a big fan of starting a long position by selling naked puts, just like I'm doing in natural gas. Because of this just tells me that the market is ripe for a turn. And as we saw before, this number here could be it for what did I say? 30 years? Yeah, 1986. This could be the same low as 1986, and this could be it for 30 years. If there's an 11/0 earthquake or some in Asia and it splits the pipelines, um, I mentioned I heard a report in school over at the college, and she was talking about how the Central Arizona waterway and Central Arizona Project and the what was it SPR SRP whatever, they are those were aqueducts, kind of like plow or paving the same roads that we used with horse and buggy for 200 years. Well, these Indians, I can't remember, or natives, Hokapai, something. There was 50,000 of them, and they had aqueducts and stuff 1,500 years ago. Okay, and then one day they're gone. Okay, so I as soon as she said that, of course, it grabs my attention, because it's not like us little humans are all privy to what happens 1,500 years ago. But it's the same thing here. Is if we have some sort of massive earthquake. Well, I assumed that they all got sick from a bug in the water. It's hot down here. The water comes out of the river. I think they were pushing the water down to Tucson or whatever. I'll find out about it and read up about it. But the part of all of a sudden they're gone. So here, you could have. I thought it was a parasite in the water, but I thought, well, hold on. Maybe they're boiling the water. Cooking. They may have learned. Don't drink. Like the still water runs deep, and then that kind of they just know. Plus they get used to it. And if you have 50,000 of them, they're yes, they're all drinking water the same day, but they may their water may be might be 100 and something degrees outside. So what I thought was, well, maybe if it wasn't a parasite, it was an earthquake. You have a fat enough earthquake, and all it has to do is split it. And you're talking, I don't know if horses were here yet. Camels, I guess, were native to the United States. I thought somebody said, really? Okay, so if there's an earthquake, they're down in Tucson, and the earthquake happens and it splits, say by Blythe. It's going to take an X amount of days to get there. Now, say for example, it's July or August. So my thinking here is that if you have some sort of earthquake, Black Sea type thing, wherever the pipelines are, and it splits, say like natural gas or whatever in the wintertime, you're going to have issues. Now follow me back to the water deal. So you have California, whose reservoirs are completely, we'll say completely empty. Okay, they can't afford any. There's no shock whatsoever. We have some sort of deal here, and you lose the Parker Dam. You know, California's going to have to move. There's just no ways about it. You know. So Detroit and Gary, Indiana real estate kind of looks like a really good value. Right? If you want water, you're going to go to where the Great Lakes are, right? And I think, what is it? Cleveland? Cleveland has some ilk in their water every summer. Oh boy. But that's okay. We're humans. It's not like we're the smartest creatures on the planet. We just kind of go around, and as long as somebody can make a nickel off of it, they'll come and save us. But sometimes it's bigger than we can handle. Think about this one though. Think about it, if you get it both ways. You get a strong enough earthquake on one side, it rattles everything, and these little rings of fire that are everywhere. You just shake them up. Didn't Ohio just have some sort of six something? Said Ohio shakes Yellowstone, which shakes down here, which shakes Asia. Not too much U.S. aid when it all charity starts at home kind of thing, but that would be just enough to have everybody have to turn on a dime, right, and buy this stuff. Okay, kind of like with the tsunami in Japan. They turned off all their nukes. They had to go back to oil. I think coal, I'm not sure. But like I'm saying, if it turns on, there's enough people out of this thing that everyone can be wrong and the stuff can turn on it for whatever. I don't need an excuse. I don't need a war. I don't need an earth. All I want to know is if this thing is going to trade higher than this, or if there's anything left on the downside. All right. And let's go to. Okay, so I did that. Got all that. So the oils and everything. A lot of the commodities are oversold. Is basically what I'm saying. Okay. Commitment of traders. All right. See if this works. Go back to you, chat. I'm not sure if this stuff comes through for you guys when you watch the video. It's video. Attendees. Just me, Kev. All right. Commitment of traders. It's yearly. It's not weekly. It's daily. Okay. Commitment of traders. Okay. You can see that your commercial spec, they're all short. Commercial specs are short. They almost got long here. Now they might be getting long here. Okay. Your large specs and your small specs. Okay. So you have, they keep chasing this thing. Okay. But your commercials they almost got long here, and here's a better price. So they may be getting long. Here's the producers. The producers of this stuff are getting long. Swap dealers, you could do that too. Buy your gold, take delivery, and deliver it to whoever wants it. Swap dealers, managed money, I think they're getting short, and other reports. Okay. Natural gas. Oh, here. Okay, that was gold. What does crude look like? Crude, you have producers oh wow, great. Producers are finally shorting. Good for them. Okay, swap dealers buy swaps are coming in. Okay. Others managed money. Okay, not much action going on there. And natural gas. I don't know if these have been updated yet. What do we got? We have managed money at a short, except for they are pulling up a little bit. Nothing. Still, commercials are relatively still long on it for a long time. Okay, so now I go to this one. Okay, our commitment to traders report. All right, take you, copy it. Chat. Okay. Okay. They went running into the dollar. Okay, so there's a lot of there's more people into the dollar now than in July. Okay, it's kind of like 100. 100 is a little obvious here. The upper end for me is 103 for right now. The easy money's been made. It's kind of like this. As soon as it goes over a dollar, right? Okay, so everything goes up. If it goes to 105, you're going to have to lower your car prices to get to have them, competitive. You know, um, there might be a pause, and it may not be as easy as a layup. Okay, just like I said before, if we're having all this real estate hit the market, the baby boom getting out, that may keep rates low. That you have supply selling instead of demand driven. Okay, Canadian dollar. This is the price. You have people getting out of their short position. Okay, and they're moving towards long. All right, but prices aren't following. What this tells me is that the people are a little too eager to sell at these prices. You have your sentiment reading here. Gold is bullish, but decreasing is the bias. All right, so gold and oil, natural gas, grains, uh, is what I'll look at. I like I said, I just started moving into the oil and the distillates and stuff for April because I saw that and the unbalanced volume, and I just knew I needed some time, to get into it, and it works out. You never know what the economy is going to be like in the spring or whatever. But like I said, you get an earthquake, it splits everything from Moscow to Europe. We're going to have to start shipping stuff to Europe. You know, gasoline is going to until they get it fixed. For all we know, it takes a couple of months. So all of a sudden, all our, every, we need to make more refiners. We need to make, just it's one of these things. It's kind of like I can smell it coming. The unforeseen. All right, and we're back to this one here. How about you do it this way, Kev? All right. Okay, euro. Dollar position. They're pretty well long in dollars here. Euro's on its own. Yen is on its own. What's this one? Okay. Okay, that's on its own. That's what I'm looking for is divergences somewhere in here. Like here you have the price is pretty much stalled, but they're getting out of their short positions. See, like here, everything's kind of floating. Like you can see here where it started taking off before price did. So you see about commitment of traders. Net long, short, net short. Open interest. Open interest is waning. Okay, natural gas. Natural gas, same thing. They're getting out of their short position, and prices are going down. How about that one for fun and games? You're able to cover on the way down. Yes, I've said that before. Trust me on this one. Just like with the silver or the oil, once it's gone, how about this one? I'll put it to you this way. You guys are selling at a 30-year low. It might be not the 30-year low, but that'll be the last time. Hey, look, my money spends too. That's fine. But all I know is that once it turns, it's not coming back for a while. I still haven't done that yet. I wanted to do a poll to see if I told you the price of oil was going to double, would you want to know a year in or what was it, a year in advance or a day in advance. You know, a lot of people lean for the day thing. I'm like, why would you want to know the day before? Jesus, when you know, like for me, I was what was I was in the '90s. I was like a waiter or whatever. At lunchtime, I'd make whatever $35. I'd run down to the pawn shop and buy a 10-ounce bar. That's what I did every time I went to work. I mean, think about this one. Yeah, life sucks as a waiter. You know, whatever. You're working at, Rodeo Drive type of thing. Yeah, you make whatever, $35 for lunch, and you run out and buy a 10-ounce bar. You wait a decade or two, and now it's worth $500. And guess what? I already paid taxes on the $35. You know, hello. So don't talk to me about going after natural gas. I know exactly what I'm doing. All right. Okay, 10-year, that's all goofy there too. So we have goofy going on. Now remember the ZERP, the interest rates are on the front end. It's not the back end. You're looking at 2 years and stuff, the front end. What am I looking at? Well, since we're on the natural gas thing, let's take a look at this here. Okay, what I did was I've had everything thrown at me. Gas, and blah 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 blah. What works for me is writing natural gas puts. Kind of like what was the last one I think I threw out there? Was it a February $2 put, and someone was going to pay me 10 cents or something, 12 cents. So someone's gonna allow me, if it does, to buy. I think it's a January contract. It says it's a February option, but it's a January natural gas at 2, and he's going to pay me $1,200 to do it. So he's going to allow me to buy something, a dime under it makes sense, right? So you want to buy natural gas? Sure. How about I give you $1,200 to do it? Not a problem. If I need to dig myself out of it for whatever, that's fine too. All I know is everything's fixed. I can't lose more than the 20 grand I put up or the 10 grand I put up, for the margin or whatever. It's everything. Natural gas can go to zero, not a problem, because it will find something for it. Okay, so natural gas. So what I did was I took somebody sent me the link to GASL index, and what I did is I split up all the underlines to look at them. And occasionally if I have time, because there's like 50 of them in there or something, I'll eyeball them, because what I'm looking for here, just like in this situation, once again, you're on balance, it's all oversold. So a lot of these are oversold. Unfortunately, they say things like energy exploration and production. Okay, I'm really not, I'm in the wrong cycle for that. This is at best it's a bear market bounce while they're closing off rigs and firing people, and it's tough. It's tough to turn on a dime and then hire people. Fool me once. These guys buy a home, they sell a home, they're gonna move back. It's a toughie. So I'd rather buy the underlay. It's a lot easier to get in and out of crude than to try and see if any of these guys are gonna figure it out. And for all you know, there's a lot of these Aubrey McClendon banana heads in there that do it all wrong and run everything into the ground. You're doing it wrong, Aubrey. How come you're not in prison, buddy? All right. But a lot, and then you don't know. I hate equities, especially these here, this type. This is like if any of you traded, your over-the-counter stuff in the 80s where they sold you stocks and warrants and units and all this other crap. All these guys calling out of Denver trying to get you in 1983, 84, 85, get you into an oil partnership. If you remember that in the 80s, that's where we're at now. So it's tough to find it. But the thing is that you can find, you can trade the underline or find something. Eventually some of these will turn. I had one this week, the UNL. Usually when somebody brings something to me, I slap it on my screen just to be able to converse. If somebody's going to bring me a winner, I'll at least go through the pain with them. So I slapped on, and I'm not sure if I sold a put and got it long that way, and then sold the option, whatever, however I got into it. But I got into this UNL, and the thing spiked, and it did like 10 times its daily volume. And I still haven't looked to see if it's going belly up or what. And they're closing the fund, but that was kind of a shocker to me because I wouldn't expect that to happen, and it came back through. All of a sudden it's sitting at $10. You sell a $10 call for $1.25. It hits it. Now we're trading at 9.5 or whatever. So I'm not sure what's going on, but it was just one of these things where it's like all of a sudden, big money's moving in. I'm assuming the fund is closing because it only does 12,000 a day, or you have somebody who's been short for since the inception, and they're all like, okay, somebody's in the business. You know it when you're in the business. I mean, it's like EIA when they come around and ask how much you have in storage. You're like, okay, so just on your end alone, if storage is going to be high or low, you can figure out the correlation. Like the Boyle here. Boyle is the opposite of, this is like UGAS versus DGAS versus UWTI versus D. This Boyle and cold, and I'm watching this one because it's the same deal. Eventually, natural gas will get to the level that it needs to get to, and this thing will turn, and that'll be the end of that story. But I just walked through these to try and see, like this one here, this one hasn't been oversold yet, so this one still probably has more to run on the downside. This one here, Chesapeake, is getting down here. Plus, you also have an ADX. I don't know. This, for all I know, you could either look at it two ways. This is like your MHR, whatever. Either Chesapeake is going bankrupt, or this is the same $5 deal that we did with Bank of America. I don't know. I don't care. I'd rather play the commodity. I know what I'm dealing with. Basically Aubrey left, but it still smells of John Corazine and company, Madoff. Just pick your felon and shove it into Chesapeake here. But you have other things too, where all of a sudden the assets are priced. Is there book value? Book value? No. It's kind of like timber. There's, or the taconite. Taconite picks up in Minnesota, and then it's dead for 10 or 20 years. But the land is still there. So it could be one of these where Chesapeake's a POS, but their assets are okay. So you go in there and you leverage buy them out and sell off everything, but you keep the land and the waiver from the EPA. This one hasn't been washed out yet, so there's more to go there. Comstock, I think I threw this one out. I'm not sure, October or whatever. What is this, 2 hours? Okay. Should be daily on these. DGAS, you're getting gap run. We're nearing the end here. I'm looking for cold. It's kind of like shorting DWTI at 200. 3 shots at that one. Devon, this one's rolling over. You may have another one too where you get Devon to buy Chesapeake or something like that. Some mergers of equals or whatever. But this one right now looks like we're going to get some sort of washout here. But that could be it too. You get the oil's beginning, it's kind of like the stocks. The stocks begin to turn before you. This one looks pretty good here. For now. Keep buying the dip. All right. I have to remember that one. Oh, shit. All right. Okay. That one's choppy. Getting a hook there, though. Okay, that's your ADX. I'll watch this one, too. Okay, here was the gas cell. And what I did was I found all the underlines, and it's not 1,000 shares of this, 1,000 shares. There's crap all over the board. They own paper. That one's getting washed out too. But what this is this tells me how poorly management works. No, I'm just joking. Is everything I'm looking at. So I can look at this and go, okay, this will tell me how the whole package is doing. I can just eyeball it real quick. Direction. Any day now, internet. All right, so your performance, daily holdings. Okay. You want to hear five dogs howl? All right, so IBB holdings, no. Oh yeah, I guess I did those too. All right, so this is your gas cells. Oops, come on, you. Their holdings, number of shares, market value. Scrodfish. All right, Anadarko, Cabot, Devon, on and on and on and on and on. Uh, Cash management, swaps, um, you know, I haven't added all of this up. Here's your market value. The one, here we go, the classic management for you. The one I looked at and thought it was good is their lowest holding. God bless them. Hey, Cav, guess what? Get long and then write the company and go, you guys are morons. All right, so this is EQ whatever, and then the other one was RRC. I think RRC I shorted. I'll have to go back and look. Okay. Cute. Look at that. EQT. All right. Okay, so this was their holdings, and what I did is I took all of them, all the ticker symbols, and threw it into the spreadsheet, into one of these here. Let's go back and look at that one real quick here. You have to be dailied because you're oversold on a 2-hour. Okay, so you're sliding into home. Your ADX is turning up, so this is so set an alarm at 64, 62, Okay, so we're oversold here. So what about on a weekly? How long have you been in business for? Okay, so you're halfway. $5, 60. Still hanging tough. This 35. All right. Heavy plays. Nothing. No yield, nothing. Exploration. Okay, so 3, 4, 5 down to here. Okay. All right. I'm gonna skip this one here. It looked good. It was just a 2-hour chart. It's one of those where it's like, oh yeah, here, let's take a look at this piece of shit. I learned that in when I was taking my Series 7. I'm just joking. I didn't take a Series 7. All right. I'm sure this is probably just riddled with lawsuits. Yeah. $4. Here, I'll show you something. You want to see something that's really sad? This is why we don't go chasing after yield. I got a buddy. I think he's still hanging around. All right. He bought this one all through, go way, way back. Although, keep going. He bought this one because of the yield. He told me it paid his electric bill kind of thing. So I know, because I've played enough tennis with him, that he continued to chase after the yield on this thing. Even before the high came in on, this is a Canadian I believe a Canadian trust type deal or whatever. You know, all through here, I know he did, I know he did, I know he did, I know he did, and now we're down to a buck. And that all that was is to collect his yield, okay, but that's what happens. All how long at $1 a share, how many years will it take to make 1,700%, 7% a year? What is it? The thing of 72, double your money. He needs 10 times, and I know it. It's sad, but when you guys go chasing after your yield, oh, it pays 7%, and here you're riding it. We're not even at the high yet, and it cratered. So it's unfortunate. That's another reason why I hate equities. I love me some commodities. Natural gas may go to zero and everybody hands it out for free, but we definitely know that it won't. Gold, silver, corn. You guys got to remember that. We if you can save your money for 3.5 years, in 6 months, in a year of a drought, you can make just straight up 10 times your money. How would you like to make 10 times your money every 4 years? And that's on the way up. And then when it rains in a drought, then everything craters. Like when I show you, I show you soybeans. Where am I here? Oops, not you. You. Oh, that'll work. Thanks, guys. Oh, better give you guys this link too. Try to do that a little better. Okay. Come on, you. This'll work. That'll work. This'll work. That'll work. Every 4 years. Drought, 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 drought. Hedge funds. And so it's like El Nino and La Nina. Same thing. This is my favorite. This is what happens when you don't use stops. Wheat not as much. Oats are usually the leader. Now we're banging back into here. You're all of a sudden you're getting down to here. Prices the same price, $2 oats. There's our little friend the rice. Should get my eyeballs on that one there. That one ran into some fraud recently too. They all do. So what you should do is just have one of your grandkids become a lawyer just for fun and games. They don't have to be a lawyer. They just have to put together the paperwork. I think we can paralegal. All right, Goldman Sachs index here. We're not down to here, this level yet. I can live with between 300 and 400. I can live with the index there for the next decade. This one's kind of choppy. Here's our cotton. Here's another one. This is Glencore when they didn't put in their stops. That's what it's like to lose $3 billion and your company. Professionals. As professionals, we all use stops, right? Right here. Look at this. Let's draw a line through here. Bullish above it, bearish below it. Right there, 60 cents. Cotton. Oops. Lumber's kind of stalled here. Cocoa, like I told you before, maybe 1,500 up higher. It's, last time I played it was down in here, I think it was. It was 800 and something. And then what was it? Oh, it broke. That's what it was. It broke out to like a 9-year high. I think it was coming through here. And then it came back through, and I lost interest. I'm glad I did. What's going on here? Oh, this is me jumping up and down about all the other commodities. There you go, Kev. You missed one. No, you made it up other places. I think the thing was cocoa that was driving me had problems is it was traded. It trades for like 4 hours a day. It trades in Britain. It's one, because at this time, why trade cocoa when you can trade ES or Nasdaq? Right? Because you didn't have that 24/7 thing, and I'm a 24/7 guy. There's nothing like well, just take for example what happened last Sunday with natural gas. Well, look, it's 12 cents higher, and then by the end of the week, it's new contract lows. And you couldn't get out if you owned any of the underlying ETNs. The old "I'll be damned, fool me once." Oh, enough of that. I need to be able to get in and out of it at a whim. On a whim. Lumber, cocoa, coffee. You see coffee, the same thing. This thing get out of hand in a hurry. I mean, coffee was so big one year. Superman was in charge of saving coffee. Remember that? Superman 3? It was right here. Yeah, Save It from Gene Hackman. Right? That was with Richard Pryor. He was the one. Oh, that's funny. Figuring out their paychecks. Well, there's always a half a penny left over. He runs a little tickler account. It scoops up everybody's half penny. Comes cruising in a convertible, tunes a blare, and yeah. You don't think the boss is not going to notice his little tickler account doesn't have everybody's. When you have 350,000 employees, and there's that half penny. The man upstairs knows because his account, his little flies, his little Gulf tipping money is missing there. All right, coffee, sugar. See, sugar, it came with the party, but to me, it just didn't have an underlying, holy shit. How about this one now? Let's see about this one a second. U.S. sugar consumption per capita. All right. Holy balskis. 34 pounds. Cute. Oh, here. 2012. Yes. Cheese. No. How cheese, sugar consumption. Oh, good. 1822. One of my favorites. So it's well over 100 pounds a person. All right. I wonder how much come off. I better save this. I meet the professor today. He told me to take the whites out of my diet. I told him that wasn't my problem. I told him my problem was these college girls. All right, so okay, so I wonder how much addiction it would be to come off, cut sugar supply in half. All right, I wonder how much sugar goes into soda pop now. All right, ECA. All right, here. That one's coming back through. That one's coming back through. This one's coming back through. This, I cannot tell you how exciting it is when you have markets. It's like heating oil. It's like shorting heating oil into February. The herd is illogically shorting something 80% off the high, 90% off the high into the period when it's used the most. I cannot, a lot of this stuff I'm going to have to kind of keep close to the vest and keep quiet because a lot of this I'll talk and stuff, but you're not gonna know every answer. You're gonna just hear a few of them. I'm working on a different project here, and I gotta kind of. It's one of these things where if you've ever owned 100% of open interest on something before, it's a little difficult. So, I mean, I'll do the cheerleader thing when I'm jumping up and down, but I'm not gonna convince. I mean, it's like it is. They're selling natural gas into a period where it's getting the most use. It's like selling what would it be? Selling ice cream. You can short ice cream in December, but at $100 a gallon, a big one of those big tubs. But I wouldn't go shorting ice cream in July or August, 90% off the high. I would be scooping up as much ice cream as possible. Of course, I'd have to hold the ice cream until July the next year, or maybe even a fall day, or come up with something that, hey, it's National Ice Cream Day. What do they call that? The Indian Summer? Then just run some sort of deal with your ice cream cone at half price. It's cold here. This is if you guys missed shorting DWTI at 200 3 times. Let's look at that first here. DWTI. I'm gonna have to go to a weekly. Oh, they're there. 200 cut in half. 175 cut 70%. 236 cut another 60-70%. Here we're getting a flag here. Same thing. People are getting into it again. So what is this? This is Dita. This is down. Oh my God. Here's another sweetie. Here's one for you. This thing's gonna come down to about 60. All right. I guess I should let's do the kids here real quick before I forget. Not doing it today. Oh, open up a new one there, Cav. DWTI. Finishing up a video. Only to render. Short this one to 60. One with code. Okay, so gone through these orange juice. This is usually March and April. This one looks, from where it's swinging from, this one looks like it's gonna go. This is per pound. Oh my gosh, orange juice. Could you imagine that? We have to sugar. We're gonna have to cut out sugar in orange juice. This does not look good at all. All right. Whoops, didn't want to do that. All right, that's a pretty good runner, but this one's going to go higher. So it's per pound. That's fluid ounces. This is oranges. So if we don't have oranges, yuck, we're all going to drink chemicals. Canola, rough rice, oats, wheat. wait, corn. How about go to the end? There you go. Oh, we're at the end. All right, come on, you. Where are you at? Coffee. Where am I at? Come on, you. There. Cotton is a buy. Lumber is sideways. Accumulate. Cocoa looks like a blow off top in the works. Coffee is somewhat of an accumulate, but it's pricey. You get whippy around here. Sugar looks like it's gonna work on something here. Orange juice looks like it's gonna go to an all-time high. It's pretty thin. Canola, it's kind of holding up there too. Rough rice, oats, wheat, Minneapolis wheat. Need to buy Minneapolis wheat. Soybean oil. So I buy long soybean oil, short canola. Meal, that's going to go along with corn and beans. Not as bullish there. Milk. Let's see, it won't take much to go to 18 either. You don't have to go very far. It needs to get some momentum here on the downside. Milk. You're selling milk for $2 a gallon in town. I'll see where the price. I should go back and find out when they were selling 3 gallons for $5 in town. Hogs are getting to be oversold again. This price down here was the first time since the Great Depression. To get in the hog business. So hogs, 50. The Chinese got into the hog business. 40 and 50. Okay. Cattle is still coming off. Live cows. Natural gas. Holy buckets. I'm going to have to start following natural gas. Gasoline. It's a good buck. Oh, so it can drop further. What gas oil is. Is that diesel? I don't know. Or unleaded. Harbor. Export, not import. Brent. Airline crude. I'm happy with it. That's happy. Dollar. 130, 120. 103, right? Right here. Dollar doesn't. It's the downside 90. So it's 10,000 a contract. Dollar index again. Aussie. Aussie's not even close to here. And turning. Worked here before. Oil hit the low here and went up. To 80. I'll play it. Canadian. Okay, so here's 85, right? Yeah. This is the low, and then silver doubled here. So this is 70, we're at 75. I went to 80, Fibonacci 89. Move to 85 in Canadian. 70 on the downside and 85 on the up. 80, yeah, okay. British pound sideways. I want to raise interest rates. What could go wrong? I need to see what happened to the British pound after World War II. This is all the commodity stuff. So this is their fingers and everything. This is them coming down but not getting it. They're at the lower end, but they're not breaking. So what do we have? We're going to have the British pound go to 120. we're going to have it go back up to here to 220. British pound, okay. Japanese yen. Bottom. Okay, interest rates. We had to jack up the 87 real estate peak. Okay, so the yen. Just a sec. That would be Europe. All those little countries. Bulgaria, Lithuania, all of those little countries can have their little issues and just keep dinging the euro. New World Order. It all works okay unless it's not orderly. Right, Swiss franc is still dumping. Sell Swiss francs to be able to support your currency. Yeah. Clean up the warehouses of currency. Okay. So Swiss franc is just cracking here. All right. Copper. 50. Yes. Long platinum, short palladium. Long platinum, short palladium. Silver. 10 to 15. Oh, no, I wanted to buy it here again. 72, so we came off here. $50. We went back down to 5. Got up to here again. 20. All right, so we'll see what happens. Maybe we get a spike in rates, short term, stagflation. Gold is still holding. Interest rates. Blessed the Lord. Best trade in 90 years right here. 5 years are cracking. 10 years are flagging out. 30 years are holding. 6. Australian. That's not good. That's not good either. Somewhat of. That's not good. X. EK. EK is our best bet. That's not good. 1, 2, 3, 4, 5. That's worth 10,000. All right. Well, better. I think I hit them all. All right, so I'm going to take care of you. We're here. Oops. HR, that one went belly up. Well, went through these already. The Gasso, Devon, that one's rolling over. 2 hour. So these are still rolling over. That one's the only one I like, the EQT, but what am I, a couple of bucks, I'll pass. Okay, so it looks like we're going to get a good rollover here. All right.
It's 12:30.
Okay. That one's brilliant, right? Who is Illyrian Natural Gas Limited Partnership? That's rolling over. These are all rolling over. I know why I trade the commodities. RRC, right? Yeah, RRC. Yeah, RRC bearish. That's what I thought. Right? Yeah, okay. All right. Okay. Good morning, friend. All right, so I totally agree with you about. Okay, so, all right. Okay, so I love the commodities, but not the companies that are gonna, you're either gonna get a piece of it or not. Southwest Energy, that looks some rollover here. See, that's the problem, is you don't know what's not on the books. You gas. Okay, so we're getting volume bust out here and a washout there. When was the last time we had a washout? We didn't. Thanks, kids. UNG. That one's been a piece of shit for a while. No one wants it. It's because you jackasses can't get your 10Ks together. Or your K1s. Morons. Here, this little guy. Okay, this is the one I was in. So I just slapped an option on there, right? 10 call. I needed something on my screen, right? It was brought to me. It said natural gas fund. So as soon as I saw this pop, this is on, fat volume, 100,000 on the volume, and they, you know, yeah, I wish I had there's nothing like making 300% in a second, right? All right. So I got, and it came back. I'm trying to figure out what the story is here. Somebody got caught. The short interest was about like 18% or something. 20. It was up there pretty hefty. All right, so now I got out of my option. I always put a price on there, always, whatever number, doesn't make any difference. Way out of the money too. And this one it was I where was it? Whatever. Here's where I got $10 or something. It was a $10 call. I got into here and I said I think a buck and a quarter, and here was the line. I'm sure that's what it was. Went to 160, and now we're back down to here. So what am I supposed to? So I need to look up this one. UNL, United States. Um, this is what happens when stuff comes to me. Is I don't like it in the first case. It has to be. It has to work for me here. And what is this? Natural gas fund is exchange the time that's price of it's natural gas. Increase or sold. Objective is term. So this is. So what is? There's UNG. Is that a United States gas? Okay, hold on. So, is the near purchase contract as part of this, and the contract for the following 11 months. Total of 12. The next month is okay. So this is natural gas contracts may be invested forward swaps. All right, so this one may be something. If they can hold their poop together. Oh, here we go. USO, USO, USO. All right, take a picture. Send it to the kids. All right. Okay. So UNG, UNL. This one, dude. It's here. Right, right. So Brown Brothers Harriman. Oh, you guys. Okay. Helps Distributors Inc. Oh, who are you people? Oops. Why are you sons of monkey bastards? Oh, okay. All right. So getting back on track here now. It's been a couple hours. All right. So we've pretty much gone through everything here. I don't like equities per se, like the Russell and stuff. We'll see how it pans out. Um, just running through all of these, it looks like we're working on a washout here because it's an angle. This one could be short right here. And it's just starting to do the short thing there. What is that? WPX. That one's bear flagging out too. CXO. Don't want to short that one. We saw what happens to people who short $2 stocks. That one looks interesting. Why is that one still up there? Man, it's turning. Keep an eye on that one too. And our futures here. See, okay. January, got the washout going on here on the individual contracts. Same thing. See, I'm looking, further out into these here. See, like now here, you saw how the January slicing through it pretty hard here. Slice through it January, February, a little bit less. Here's March, not as much, and then April. April's not there yet, but to get the washout. So the deal is the deferred contracts aren't moving. So I want to buy into any of these back here, because if any of these guys are going to go to zero up in here, these guys are going to go bust. It's going to be on the front end. So I want to be, April. Here's May. May's not below it yet. So you see that there's some hesitation to make new lows on some of these. You're getting a washout. So basically, I'm just going to start in for. Where did it go? No, looking for. Okay. All right, that's all good. Okay, so December. Yeah. Oh. Okay. Yes, thank you. Yes, yes, yes. I was looking for food. She's cooking biscuits or something. All right. December 15. Okay, those are done. Okay. This one's coming off the board. We have a couple more days and this stuff's coming off the board. So just like we saw with the November one. This is it. So here's 195. Okay, on the natural gas on the front month, and so whatever the front end on December, whatever it's going to be working on, that's the target it's shooting for. Like tonight, so we're talking about 195. Okay, so 195 on the low end. Whoa, 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 whoa. Why are these? No. And they're not enough. That's kind of what I was looking for. Sunday. Oh, here we go. That's what I'm looking for. All right. So run through the futures real quick per volume. I'm gonna go off of this and say that if we do shoot up into here, 2180, since these seem to be the strongest, and a lot of them are coming off of it. Um, you're getting a lot of bounces in some of these here. Like take Apple and Disney and Nike and Exxon, and you're getting a lot of these here who are just they're bouncing and looking for this, and then the Dow stuff. All right, point and figure. So these are going back. So you're having a bunch of them here that are bouncing off, like a Chevron, Caterpillar, DuPont was a nice mover here. DuPont, Disney came back. GE, you're getting some of these like here. IBM needs to join in the bandwagon, to help out the situation. And since it's price weighted, you know, I'm sure of it. What they do is IBM goes up and one of these other ones come down. Uh, let's see here. What would be one that would be coming down here? Travelers would be one, as if we're going to get this earthquake thing, whatever. It's insurance. It's broken out. Pfizer finally figured out what was going on there. Merger stuff. Microsoft might be taking Apple's deal. Uh, you have that. It's what do they call it? Laws of substitution. Um, if you begin to piss off the Apple people, the new ones aren't as privy because they're just part of the herd. But if you want, for those of us who've been with Apple 30, 40 years or whatever, right, that Apple's turning into a POS company too. You can't do this, you can't do that. This, that, and the other thing. It's kind of like what they call it, jailbreaking. You can't jailbreak your phone. It'd be kind of like you can't put, you can't put an 8 carb or whatever on your engine on your muscle car. It's illegal. You can't do that. It's go fly a kite. It's we wouldn't be doing this if you would allow us to do this, you morons. They don't get it, and that's the first down because all you have is people who jailbreak their phone and still talk bad about Apple. Just Apple. If you've ever been with Apple for 40 years, you know what I'm talking about. One day they're just holding hands on stage at at Macworld, and then Adobe, and then the next day it's go away. But that's fine. Apple's headed to zero anyway. They all go to zero. You know, that's take Kodak, General Motors, and go down the list. You know, Penn Station only lasted 50 years. That was a huge thing. We need to get across the river. Okay, how about going underneath it? Ooh. And then there's Madison Square Garden. There we go. This is what we need. All right. So, okay. So, all right. So, here's my story, and I'm sticking with it, kind of thing. I don't like equities. I don't find them expensive, but I don't find them cheap either. I'd rather go after and short debt. Okay. This stuff is all fine and dandy, but what I think is happening is if we do move up into this area, I don't expect the rest of the other ones to come with your Russells and stuff. And then this will be the setup for the interest rate hike, like we had in 19. All of a sudden the market drops 10%, which would be back to 2000, or more. If we get to turn on the commodities, depending upon how hard they turn, all of these, they just, as soon as I saw this, I knew that they were getting out of it. They were these guys were able to get it at a good price, and weren't able to hold on to it. And they're just pitching. They bought the low, and now they're making it. Yeah, new low here. We're getting a turn. All right. Okay. All right, I'm gonna go get lunch. It smells pretty good. It smells like cornbread or something. Gold. Yeah, we're gonna get a turn in commodities here. Ha ha ha. Wouldn't that be funny? Commodities outperform equities next year. So what do we need? We need a CRB versus the Wilshire, WLSH, daily. All right, so I need to get rid of that. Dum 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 dum. Close. Where would close be? Solid line, thick, weekly. Or how about a monthly? Yeah, there's our hook. This is our hook in our ADX. This is it right here. Buy stocks, short commodities. Well, here it is too, right here. 1999, buy commodities and sell stocks. It worked, even though, yeah, it did right here. Look at that. All through this period. Okay, I'm not gonna. Here's if you guys made it to all the way to the end of this deal, it's all yours. Commodities will outperform equities in 2016. I'll stick with that. It works for me. So it's going back to 86. So we could be having this thing now because it moved in 86. Yearly? Go back yearly on me. Okay. All right. So that's my story then. And I'm not going to tell everybody, but here's your winner. Is what I did is I took the CRB index and divided it by the Wilshire, which is equities, so it's long stocks, or it's long commodities and short equities. And I don't know how far it's going to move. And it could be a percentage thing. Commodities go up 14%, stocks go up 13%. It still outperformed it, right? But you'd be better off sticking in there with stocks. All right, so that's weekly. In the monthly, that turned down. Yeah. All right. Okay, that's our winner, right? Yeah, stick with it. Oh, where's my stuff? Oh, Sunday. Sorry, it's Sunday. All right. Run through the commodities and go at lunch. Futures. 1, 2, 3, 4, 5. That's what that looks like. Oil, washout. Brent, same thing. Corn. Looks like they've already gotten into it. They've definitely gotten into it from March of next year. Yeah. Corn or gold. Natural gas. Natural gas again. Brent. Same thing. Yeah. Ooh, that was a good one. Soybeans for January. All right. Time to buy some options. What do you got for soybeans? Pieces. Anyway. Beans, options, calls. Where are we at? 50s. 21. Buy this. Sell that. Oh, that works. Take it. And oops, wrong password. All right. I'm gonna let you go here. What's the 2 for 1? 10-cent spread? Yeah, okay. Canadian dollar. All right. Sugar. See, they're already in there here. I'd be long sugar. I'd be thinking about writing some calls if you're walking it up. Copper, here's your ADX, that crude oil, gasoline, wheat, silver. They all are, yeah. There it is. There you have it. Commodities to outperform equities in 2016. I only had the S&P going to 2,400, so that's 10%. So yeah, like I said, stocks go up 10% and commodities go up 11 and still outperform. So okay, all right, everybody, that there you have it. I'm gonna go and render it now. It'll take forever, but y'all have a wonderful weekend, and I'll see you in a few hours.